Hey everyone, Coach Russ here. Today we're going to talk about a client that I worked with a long time ago now that was taking themselves out of business by increasing sales. Yeah, you may be wondering exactly how that would work. The truth is that accounting is the language of business. If you don't know your numbers, if you don't understand accounting, it's like going to a foreign country, not speaking the language, and opening up a business. Imagine how that would work for you. So maybe you've heard the phrase before, profit's an opinion, cash is a fact. That is the truth. We can only spend cash. So how do we make sure that we've got cash to spend on the things we've got to spend it on? We've got to use QuickBooks appropriately. Everybody knows about QuickBooks. They don't always keep up with QuickBooks because let's face it, a whole lot of us get into business not to be accountants or bookkeepers. We got other things we'd rather do. But if we aren't doing good accounting and keeping track of things, we're going to get in trouble quick, just like these clients did that I worked with. Simple things with QuickBooks to look at regularly. First, always look at your cash position. Sometimes people are going to check their bank situation every day, but at least check your cash on hand, cash in the bank weekly. Monthly, check your income statement or your P&L. That tells you how your business is performing. Third thing to do is at least quarterly, check your balance sheet. That tells you what your business is worth, which is going to really matter to you over time, particularly if you want to sell your business at some point. But what's really critical is to do cash flow projections. That is to plot out what you expect to bring in revenues versus what you expect to spend for the week, for the month, for the quarter, so you can start to look forward and anticipate when you're going to need cash on hand. When you do that, you're just going to feel better about life. You're going to feel better about your business. You're not going to be caught unawares. What I finally did with this customer that I'm telling you about is I went into the details of the L side of their P&L statement or the cost side of their income sheet to really understand what all their costs were, figure out their cost structure, and then look at what they're actually pricing the product at and how many units they had to sell to make a profit. Because of the way they were pricing things, because they hadn't considered their own costs to pay themselves a profit, they were losing money every time they shipped a product. We ended up having to increase their prices 60%. They lost about 25% of their business, but for the first time, they were paying themselves, they were making a profit. The other thing that made it even better is after about 6 months, the people that dropped their business with them came back at the higher price. It's really worthwhile to keep track of what you're spending your money on, where your money's coming from, where it's going. If you'd like to talk more about this, if you've got more questions, click on the link below to set up a quick call with me where we can get started on the process of what to do to make sure that you have cash in hand and cash for the future to make sure you're paying yourself and you're making a profit. I look forward to talking with you. I appreciate your time. Have a great day.